Good weekend, everybody. Here is your market minute for Sunday, the 24th of March. Let's look at the S&P 500 and let's try not to overthink this. We've had trends like this in the past that have gone on for a long time, and it's easy to overthink them, especially half of the way through. Or as we get closer to what is the final top, it's so easy to overthink yourself and to trip and fall. So we're going to do the standard fractal analysis. We have the monthly chart over here on the left-hand side. We have an extremely strong swing on the monthly chart to the upside, although we are approaching some pretty severe exhaustion. So there's a limit to how far these things can go, although we've seen this. Like if you look at this one, halfway through 2021, we were showing this signal, and it just continued to chop and grind itself into the eventual high at the very end of the year. So the lesson there is just because you see a specific technical signal does not necessarily mean by itself that that is a death sentence for the trend. Not yet. So anyway, monthly chart trend is good. Energy is somewhat suspect, but still could support a trend. Looking at the weekly chart, actually the news is getting better there. Weekly chart, we've had this swing here, which has gotten to be very choppy. Notice how choppy this one is compared to this initial swing off the bottom from October. So that one was very strong, got us to an extremely linear exhaustion point by the end of the year. But the chart's done actually a pretty good job. And I think this will actually, even as we get to Monday, will probably even increase just because of how choppy this is. And it's going to be starting to drop off some of these very strong candles near the back because we've been basically chopping around quite a bit since mid-February. So on the weekly chart, actually the news is pretty good and probably improving from there. Now we get to the daily chart. The daily chart, as of a week ago, we had an amazing amount of energy. So all of this sideways is nothing more than winding the spring up tighter and tighter and tighter until it eventually breaks in one direction or the other. So far, it's broken in the upside direction. We're approaching exhaustion, but not quite there yet. So now what I'm going to do is I'm going to zoom in on the daily chart and tell you what to look for as far as the price. All right, daily chart, you can see the trend. You can see the trend line, which is really connected all of the major lows all the way through this. And we've also had this consolidation, this very flat consolidation that we had throughout the month of March. So here is the upper trend line to that. It's more of an ascending triangle more than anything else, and it's almost reached its measured move target to the upside. But here's the thing. What we want to see happen, if we want the trend to continue for this, notice what has happened on all of these breakouts. So all of these breakouts in the past, when we break out, it would continue. Next consolidation, we get a breakout and there's continuation from it. Here's the next consolidation on a larger time frame. Very clear area to break out above, that's 4,800. Once it breaks out, it just keeps on going. There's no stopping to look back or anything like that. Next range was in this area here. Pretty clear breakout, a little bit of a retracement, but eventually it continues higher. And then that leads us to today, where throughout the month of March, we just chopped around quite a bit until we finally broke higher the other day based on the Fed day. So then Thursday, Friday, all we've done is basically tried to close some of this gap here. Now, what I want to see happen is if we want the price to continue higher from this, then the trend needs to, or the price needs to either stay steady here or at the very worst, pull back to the breakout level. That's fairly common for the price to break down to the breakout level, retest it, and then take off again. What we do not want to see happen if you want to see this trend continue is to see the price come back down into the former consolidation zone. That would be bad. That more than likely would set up a pretty wicked bull trap, trapping all the bulls that jumped in on the breakout from the Fed. And more than likely, we would end up probably somewhere down here, 4,900, could be 4,800, could be any combination of confluence of support. And this could happen very fast, especially if it's accelerated by some type of exogenous event, which nobody is anticipating. It's funny how things work out like that, where we have a technical anomaly like this breakout match up with some kind of unexpected event which comes along and creates the trap. So again, just to keep things clean here, we want to see the price stay pretty much above the 5,200 level for this breakout to maintain its strength. And if it pulls back down into the former range, this is going to be a bad thing, and this is more than likely going to lead to a bull trap and probably lower prices. So there you go. That's my look at where the S&P is right now and the two different directions that it can take from this point. That's it for today's Market Minute. Thanks for listening. We'll see you in the next one.